Hello students, this is Professor Vincent Osaya. Welcome to my class. This is the presentation of Chapter 1, an introduction to assurance and financial statement auditing. Let's go ahead and start off by talking about the study of auditing. Here we said that the study of auditing is different from other accounting courses that you have taken in college, because in other financial accounting courses, our main objective was to understand the accounting principles relative to the subject matter and how to apply the accounting principles. Then based on our understanding of those accounting principles and the applications, we then prepare the underlying financial statement, be it statement of cash flows or income statement or balance sheet. Then ultimately, we roll up our sleeves and analyze and interpret the numbers. So most of those courses were very, very quantitative in nature. Bunch of rules, bunch of techniques, bunch of computations, so on and so forth. However, in auditing, our goal is to learn different audit concepts and how to apply them in different situations during the course of conducting an audit. So therefore, auditing is very analytical and a lot of logical skills are required, and it is more conceptual in nature, unlike other accounting courses that we have completed. Moving along, let's take a look at the demand for auditing and assurance. Auditing is actually part of assurance service or services that CPAs provide. So let's take a look, let's talk about assurance from the outset. We said that certified public accountants provide services that improve the quality of information, or whenever they perform a service that gives information more credibility for the benefit of decision makers, we call those kind of services assurance service, and auditing is one of them. So here we said that the development of the corporate form of business and the expanding world economy over the last 200 years have given rise to an explosion in the demand for assurance provided by auditors. So what are we talking about here? The corporate form of business have now enabled the realization of capital or a lot of resources from different stakeholders or owners of a corporation, and those owners are usually not part and parcel of the day-to-day operation of the company. So to that end, these owners need information regarding their investment or potential investment that have a lot of credibility. So hence the demand or the demand for assurance services provided by auditors or CPAs. Now let's take a look at the principals and agents. We said that a public company is a company that make his ownership or stock available to the general public. So for example, you can go to downtown Chicago and buy IBM stock, and you becomes one of the owners of IBM or General Motors, so on and so forth. So we call those companies publicly traded companies versus privately companies whose ownership is not available for the general public. So given the from that standpoint, most of these major publicly traded companies are actually being managed by individuals that are not necessarily owners. Now, those individuals, we call them managers. So they are more or less agents. working as agent for the stockholders or for the main owners. So the stockholders or the shareholders, they are the principals or the owners of the company. So that is usually how the arrangement works, and that is the relationship between principals and the agents. Now let's take a look at the role of auditing in connection with the principal-agent relationship, in connection with the demand for auditing. So take a look at this diagram. From the outset, here's what happened. The principal or the owners normally will provide a capital, resources, tens and hundreds of millions of dollars and billions of dollars, and they hire the agent to manage these resources on their behalf in the most effective and efficient manner. Now, the principal or the principals, like we indicated, are not involved in the day-to-day operation of the company. And we also know that the agent is accountable to the principal, and they are accountable by way of providing financial report, meaning financial information to the owners or the principals on a periodic basis. The question becomes, how is the principal, how would the principal be assured that the information that is being provided actually are authentic or have or are credible? So guess what happened? The agent are now required to hire auditors. So the auditors will now report on the truthfulness or the fairness of the agent's report or information. So the agent, of course, is obligated to pay the auditors in order to perform this service. So by having a third party or auditors report on the truthfulness of the agent information, the information risk of the principal is now being minimized. So now you have to also recognize the fact that the auditors have, when the auditors are hired, they now have to gather evidence, okay, to evaluate the truthfulness of the information that the agents are reporting. So ultimately, the auditors, upon the conclusion of his work, will now issue a report as to the credibility of the report, thereby reducing the principal's information risk. Now, so take a look at the middle. We have information asymmetry and conflict of interest lead to information risk for the principal. So on one hand, we have the principal or the owners. They are absent. They are not involved in the day-to-day operation of the business. The agent are involved in the day-to-day operation of the business, and the agent obviously have more information than the absentee owners. So in order to bridge this gap, the auditors now have to play a very critical role in order to bridge this gap. So moving along, let's take a look at the role of auditing. Now, for the remaining part of this semester, it is one issue that we talk about here. This is a summary of management assertions. Okay. Now, what do we mean by management assertion? Those are claims that management is making as reflected in the financial statement or the financial report, reports that are being provided to the decision makers or to the principals or to the shareholders. Now, what does that mean? Now, let's take a look at an example here. Here we have an income statement. Revenue, $800 million. Expenses, $500 million. And the difference of $300 million is the net income. when management provide this income statement or prepare this income statement, management is making a lot of assertions or a lot of claims as reflected in this income statement. Let's take a look at number one, revenue share. What management is saying, they don't have to say it explicitly, it is implied. What they are saying here is transactions actually occurred between the company and the customers during the year that result in $800 million. Okay, they are also, management is also making the claim that all the transactions relative to revenue, all the transactions are complete, and the transaction and event, or the underlying transaction and event, has been authorized. Now, management is also claiming that the revenue of $800 million actually is complete, and they are also making claim that all the related disclosures have been taken care of or have been addressed. So management is making a lot of claims, and those claims are reflected in all the financial statements, be it income statement or the balance sheet. So again, like I said, management assertions is very important, and we are going to talk about this in a great deal as time progresses. So now let's take a look at the relationships among auditing, attest, and assurance services. Lest I forget, let me go back to management assertions. Management assertions are divided into three categories. The first one is assertions about classes of transactions and events for the period under audit. The second category is assertions about account balances at the period end. And the third one deals with assertions about presentation and disclosure. So again, we are going to talk about this more extensively as time progresses. Now, let's take a look at relationship among auditing, attest, and assurance services. Very briefly, auditing and attest, as you can see in this diagram, are examples of assurance service. Like we said, assurance service is a service that a CPA will perform that gives credibility to some information for the benefit of decision makers. So subsequent slides, we are going to talk more in detail as to the definition of auditing, attest, and assurance. So at this point in time, let's go ahead and cut off and start the part 2 of this presentation from this point.